The price index ticked up this morning following 3 straight months of no change. The 0.2% increase is the biggest in inflation in 4 months, biggest increase. Joining us now, Ben Eamons, Medley Global Advisors Director of Global Macro Strategy. Of course, that was the headline number. If you back out, food, you do get a number that's a little bit slower than had been estimated. And year over year, a little bit slower as well, just 1.5%. So what do you make of the inflation picture with all of those moving parts?
So it plays really nicely into this global inflation picture that has been moderating since, say, the third quarter of last year. So it's given us a really benign backdrop for financial markets this year. Why? Well, one, central banks have responded to that sluggish picture of inflation and have all pivoted back to an accommodative stance. And secondly, slow inflation is actually good. It's good for growth. I would actually think that the rebound in global growth is probably coming in the next quarter or two or so as this inflation picture stays benign. I think this is why financial markets are responding positively, seeing this growth picture improve in the next quarter.
I just want to I have this fear of the word deflation. Sometimes people mean disinflation, but you use the word deflation, and it's not in the United States, but is there a threat if China is going to experience deflation, that these discussions of inflation are not where they should be focused, because a deflation situation here would hurt all of us, and that would be contagion from China, would it not?
True, and I would think that the PPI number in China has been always the gauge of global inflation. So yeah, it has moderated close to zero. It's reminiscent a bit of 2016 when we were that low too, or in deflation. But here's the good news, I think, is that China has made this kind of efforts to try to restart its economy quicker this year again. And given the trade deal coming together, that uncertainty dissipating, I would expect that number, that PPI number, to reverse positive, what we call reflation, and that would be pretty positive for markets, I would think. So I think that the risk of deflation in itself, global deflation, is moderate. It is in Japan, but that's been there long term. There's a threat in Europe that it may revisit some period of time. But I think the Chinese situation is more a function of the slowdown that we've been through the last sort of year now, that could reverse later this year as that stimulus really starts to percolate through the Chinese economy, which is sort of happening.
It doesn't seem like we have really any threat of any central banks waiting too long if they see this disinflation or deflation issue. But from just a larger standpoint, if you think back to the second half of last year, everyone's concern was that central banks were not going to be able to navigate the road ahead because you saw inflation ticking up. Oh, we're going to have to raise interest rates. How are they going to do that? That issue has gone away in 2019. There is no bank out there that's worrying about, gee, how are we going to raise rates? The issue now, again, is are we going to go back to a more accommodative policy? Isn't that a good news story, that it's gotten easier for banks? The road ahead is clearer than it was 6 months ago?
It is to that extent, because yes, you don't have accelerated inflation, you don't have all this uncertainty about inflation. It seems to be moderate, seems to be mute. It seems to be basically based upon a growth picture that has moderated from the high from last year. Doesn't make the central bank's policy effort easier per se, because indeed, to your point, if there is risk of more sluggish inflation and deflation, and then we would see a lot more action from central banks to try to reverse that. I think currently it's just a situation of everybody's neutral on hold. We're not going to see easing just yet, other than some little bit efforts like what the ECB did last week, for example, as a small example. Other than that, I think that central banks stay in hold until the latter half of the year to determine if this disinflation that we went through has started to reverse again, to have a debate about should we resume the tightening cycle, right, which could be next year's story again.
All right, Ben, thanks for coming in. Great
Okay.
to see
Thanks,
you as
Ben.
always.
Yeah.